Good morning, everyone. Hope you guys all had a great weekend. All right, Glenn, we'll get to SPX on YouTube. By the way, I don't know whether it was YouTube or Zoom, those of you on YouTube, but they wouldn't talk to each other on Friday. That's why we weren't here. All right, so we've got a interesting setup here. I'm not sure yet which way it's going to go. Some days are more certain than others. One of my scenarios I wrote about over the weekend was possibly that we have a tradable low here. And so our internals are giving us what I would refer to as a weak buy signal. And this retest pattern that's in the making, possibly a sloppy kind of a W. And so we've got the momentum move down, right? So a W pattern or an M top, they have certain criteria. And we've went over that, I think, in the last MT Live, different bottoms that we talked about. And one of the criteria is that it's preceded by a momentum move that creates a void. Now, ideally, W bottoms happen after a move to the downside has been underway for a certain period of time, meaning the momentum move that preceded the W bottom was kind of like the climactic move just before the end of a downtrend. Whereas this one, if it turns out to be a W, is happening at the beginning of a corrective process. Now, this market is in a sideways trend now since it took out this reference point of major support, this pivot low prior to the higher high, right? Higher highs and higher lows, breaks the prior low. It's no longer in an uptrend. Not in a downtrend, so we call it a sideways trend. Pretty simple. So the move down, that ended, let's just say, a week before last, because last week was just going sideways no matter where you looked, other than, say, energy. Everything just chopped back and forth, which created this little low, which is easier to see here on the intraday chart. And so the idea is we've got this sloppy, possibly W pattern. And so buyers are beginning to step up here today. And for the futures anyway, they've marginally cleared Friday's high, which opens up the door to the void. Now, wide range bar on a daily is going to be a momentum move on intraday. And that's this move right here. So the move overnight is kind of churning back and forth here now. And it has the door open if traders want to take it, meaning we can bottom out here and then possibly push up to this prior high. Right here at the top, as you can see the line moving, the top of last Thursday's range. And if it can do that and hold on to it, it opens up the possibility of going a bit higher. So there's a lot of ifs in there, but that's what we're dealing with right now. And so if we see this chop around today and go nowhere, now that it has the door open to go higher, well, going sideways at support and cannot lift off is going to be bearish, and that's what will create potential for a measured move lower. And the weekly chart is more supportive of that. So we're in this situation of misaligned pictures and time frames, which is going to make it a little difficult until we get more information. Yes, Tony, the weekly pullback obviously is still shallow. So, based on the weekly chart, and I covered all of this in the advisory letter, would be for a normal pullback within an uptrend to come down around the 3,200 level. So we're kind of in a neutral area here where, within this time frame, traders, and rightly so, want to test this area and buy to see if, hey, maybe this is just, this nasty pullback was just a moment in time within this upward move, and it's going to repair the damage and be able to come back up. Now, we'll see how it all plays out. But after a move down like this, the expectation is it's going to take some time to, just regain the confidence that was lost. So when you see bars like this that are relatively the same in range and move up with like one pivot, that means that the majority of individuals that are in the market, call them institutions, hedge funds, regular traders, are all of a like mindset or close to a like mindset of this is going to go up. And it reached a point where this accelerated where it was like, uh-oh, everybody got nervous and kind of dumped it, and so now here we are at the rising 50. We're at some support, and we're going to figure out through the battle of supply and demand as to who's going to win here and whether this can go back up to the high or it just flips up here, rolls back over again, a little bit more complicated pattern, if you will, of a lower high and then lower low, which brings prices in alignment with the weekly time frame of creating a buy setup. So that's what we're looking at this week overall as to, how things can shake out here and just on a short-term basis, little moves into the upside or downside until we get more information. Jake's offering Iron Condors on SPX here as ideas, 34.30. These lines here are different measurements as far as possible corrective moves. We're at 7%, maybe it goes 10%, and this would be the measured move here, which would take it down to the 200-day, but we shall see. As far as SPX credit spreads, 34.40, maybe 34.40 would be above Thursday's high. I think that theoretically should be safe, yes. Right, a little close. If you could get above 34.50, go 34.50, 60, that would be more in alignment with my comfort level, which would make it as close to a no-brainer today as you're going to get. And then 3,300. 3,300. I would not be inclined, I do not think. Up at the top here, I don't know yet. 3290 is more about what I like too, McGraw. So let me post this to those in YouTube that are so interested as ideas. Those are the levels. There you go. Okay. So here, these were potential targets if this correction continues. Right down here, 3211 area, 3200 would be about a 10% correction. And down here, obviously, I've just done the measured move and would be considerably more, obviously. But that's where the weekly chart, part of where the weekly chart would line up as a logical buy setup. Okay, Qs. We're going to same story here. More of a whip on Friday, back and forth, inside day so far. So neutral. We don't know which way this is going to go. We look at the intraday charts. We can see that overhead resistance is pretty close. There's a void below. I don't know what to do with this, which means sit on hands for now. YM, similar to the spiders. Pulling back to minor support where buyers are beginning to step up here. Same story. You can see the weekly, you can see the daily. It's the same. And Russell, I was kind of hoping, we always have our hopes as to high probability patterns. And I was kind of hoping that this would just follow through lower this morning down into this area where it would be a good setup to consider longs. Obviously, that's not happening. And, the move up here this morning is going to make it more difficult. So we'll see. Up near resistance, not interested in longs. Not so sure about shorts. So I don't know. Some days are clearer than others. Bonds just chopping around here. Last week week or so we covered this. We're looking for this to come down to this low. So far it's just chopping around here, trying to build a support area, which it is doing, right? On this swing low, once it made a pivot, it created new support. And so that was being tested, and not sure yet whether it'll be successful at doing that or whether it'll eventually get down here. So another sit on your hands pattern. Crude oil just looks like it's begging to go lower, right? So it's another tricky pattern where this type of momentum is power, right? Selling, 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 wide range bar. And those of you that have been here for a while, you know the routine, right? We just simply put a arbitrary line, not arbitrary, but halfway in the area of that wide range bar as a reference point. If it stays down below the halfway mark, the bodies, it's weak. So as it goes sideways here, it is building an area of potential resistance or support if it can get above it. But the ideal scenario with something like this, which, we're always looking for the sure thing trade as sure as it could possibly be, is this little consolidation, finding some buyers that pops it up here and then turns it into a topping tail where it clears a bar or 2 bars highs and then gets knocked right back down again. So that little flush brings in buyers and then flushes them down, and that opens up the door to significantly lower. If it closes above this line, say with a big green bar, well, it opens up the possibility of pushing up into the void. So for now, we'll leave it alone. And gold still shaping up. Last week it looked like it was going to go. It made the turn and then it kind of got higher and came back in. But, bar by bar analysis turns into pattern analysis. Right? Every pattern is created by individual bars. So bars give us messages. They speak to us, right? What we call candle language. So we've got a pivot here and a turn and then a retest, and it comes back up again as a bottoming tail bar. And we get this green bar. And it's like, okay, it's going to go up. Well, it went up, but sellers came in here, knocked it back down, and now bar by bar, we see that it's holding up after getting knocked back down, which is bullish. So it's got this resistance from the topping tail right there it's dealing with, but it's beginning to shape up into a bigger pattern. Gold takes too long to form the pattern. Possibly, Alex. Yeah, that's a thought, of course. So 2 things to take away is that, look, this move down was power. To resume going back up is unlikely immediately. It's the same thing as looking at, the S&P 500 and how it came down, or anything that the equities that came down as they did. To expect it to go back up without some kind of reaction to back down again doesn't make sense. So this W bottom that I spoke about this morning, the expectation is that it doesn't go back up to the high. If it can get through the middle of the W, it would be more like, okay, you get up a little ways and get slammed back down again and maybe continue. So this looked like it could get slammed back down again, but it's holding. So through time, it's repairing the damage. And what we see happening on the weekly chart is a longer period of consolidation. So this doesn't jump out at me as being ready to go. What I'd really like to see maybe is like that flush type of setup where these have been coming down. So, and I know you would too, you'd recognize it immediately. If this week turned, that came down under this support and it sprung back up again, this would be perfect. So we'll see. You know, it's improving. I'm not so sure that it's ready yet. You know, and it is coming near resistance. So we'll see how it shapes up. Silver, kind of just going nowhere. So not sure about that either. And I wouldn't call it a star performer, but it was flat last week, and the transports held up pretty good. So that's a positive for the market. So the takeaway, I guess, going into this week, and we didn't look at internals, but you know, starting out is let's see what you can do here in the first 30 minutes or so. Our internals, as I said, has given us a weak buy signal. And I say weak because sentiment has only come down into this upper band, which has been grinding higher, which is what it's supposed to do. It's what I designed it to do in a bull market advance like that, to bring the bullish level up higher. So the static historical level is down at 1.2. We're not even at 1 yet, but you know, it's into the beginning of this band, and this is over, you know, an extended area. So we shall see. I don't have anything jumping out at me here over the weekend or this morning that's saying this is a great opportunity. So we'll see how it unfolds. So all yours, Dan.
Did I hear you say you're done?
Yes, you did.
All right, yeah, I was at the front door. All right, good morning, everyone. Yeah, we'll go through gappers here. All our opens are fine again. Only have 3 opens in the weekly. We have a couple. Our DAR looks great. I even said they could add if it's gapping up to 35.50. Then we'll trail a third. Just glancing over other things. Yeah, everything looks fine. All right, we'll go right to gappers. NVIDIA. Let's see, 522, mark it off. Yeah. I mean, it's a big gap, but it looks great. So sure, we'll put it in a window here. You know, look at this. Well, I can make it a 5-minute chart here, but Kramer was pumping it here, saying it's artificial intelligence. What a great combo, this and that. And you know, we trade people, and if they're watching any reason to put fear or greed in a stock, and that's what Kramer did there. He was pounding the table on it. And look, I don't mind trading pre-market as long as something you got a power and it's liquid. So that that actually was a nice pre-market long. Oh, George, yeah, your New Orleans, yeah, that storm. We had bad weather on Saturday, getting the southeast corner of the rain as it headed northwest. Yeah, I just got an alert on my telephone that it's a Category 2 hurricane now. So yeah, I'm feeling, buckle down. Cisco Facebook gap, Cisco 4030. It's gapping resistance in a downtrend. So I really don't have much interest in that. And Facebook gap 270, mark it off. You know, so many daily charts are damaged. So we are just interested, for the most part, unless we have a beautiful chart, kind of like DAR I showed you was beautiful. But for the most part, I'm in day trade mode. But I do like the 5-minute chart is gapping up to resistance with a price void. So I like Facebook for a day trade if the Qs want to keep rallying, which they are right now, pre-market highs, the Qs. So yeah, this reminds me a little bit of Friday. You know, we gapped to, no, it wasn't Friday. It was Wednesday where we gapped to resistance and then took out the 15-minute high. But right now we're gapping resistance. This looks like a beautiful 30-minute high day. I just sent a telegram, weekly options people, that I'm going to be looking to do a 0 DT put spread. YouTube is asking about NVIDIA and Oracle. We just did NVIDIA. I said I like it on an intraday setup. Oracle in the news of winning the TikTok purchase in the US. I think it had earnings on Friday, gapping up to all-time highs, got slammed, now 61 bucks. No pattern. Wow, that's another big gap. Wow. Gapping over the opening price of Friday. The 15-minute chart is iffy. I think I like NVIDIA better if it sets up, or even Facebook. I don't. It's a mess. Sure, you can watch it, but it's not what I call a tier one. Let's go to these other gappers. Yeah, I don't know what to do with Oracle, so it's not a tier one. SGen here, 165, a bio. That's a big gap way up here. But the gap's too big for me. It's a bullish 15-minute chart, so it could go higher. I don't know. What's up with FedEx? I checked to see if it was earnings, but TC says earnings tomorrow. Look at this thing gapping up $8 to after. Here's a good example of some people think that all gaps get filled. That is an incorrect statement. I mean, look at it. This was a huge earnings gap that day. And look at it just going sideways. There was a breakout. There was a breakout. This is what we call a churning uptrend, which I have no interest in whatsoever. It's, you see the moving averages starting to get farther away. Yeah, if it did not have earnings, 30-minute low, I'd maybe consider selling a call spread, but I'm doing nothing with it now. Saba, yeah, this looks like a little biotech, no interest. SGM, S up. And I'm not a fundamental guy. I don't know if this one's up because of NVIDIA purchase of SoftBank's AI company. This is maybe same space in the gaming, but no pattern. Infi, there's light volume, so it's kind of hard to tell if it's real. But if it is real, Arun, then I like it a lot. So I'll put that in this bottom chart. Zyme had a big old move Friday, gapping up again. This Wednesday, MT Live, we're going to be talking about failed patterns. Look at this beautiful 180 reversal on the 15-minute chart. That is a failed pattern. That's a failed breakdown. Beautiful 180 right there. Abgo 364. That's, consolidating in an uptrend. That's strong. Is that, I'll put it on the list as, I don't know if that's just on the heels of NVIDIA. Hey, Steven, if you can put your drop down, all panelists and attendees. Yeah, this is what we call a something bar. Look, it's kind of just consolidating a buy setup on the weekly. Now it's perking. Yeah, that's a definite watch. Yeah, thanks. I'm going to get rid of my FedEx over my other computer. Put Kindy over there. DPHC. It's a bullish 15-minute chart, but you know me, Khaled, I'm not buying that. Look at the 20 MA. Look at that. It's over $10 away from the 20. It looks more like a gap and crap on the daily. Our DAR did break out. We can tighten the stop now. That looks great. I said in the letter we're already in it, but you could add. But I'm doing nothing here at the open. Big gap. These resistance. I think it's a great 30-minute high or pullback day. 34.16 DAR. Stephen Cack, bottoming Friday for revert